All right, it is now 4:15. We will be beginning the Financial Services and Multi-Lines Issues Committee at this time. Please take your seats. Thank you. And first, we will start with a motion to approve the April 27th, 2025 committee meeting minutes. Do I have a motion? Second? Right, Lana? Thank you. All in favor? All right, there we go. So good afternoon, everyone. My name's Jarek Gandolfo. I'm an assemblyman from the state of New York. I will be chairing this committee today. There is no need for a roll call. The staff will mark everyone's attendance here. And also now I will have to entertain a motion to waive the quorum requirement. Second?
Second.
All right, all in favor?
Aye.
All right. I don't know, wait a second. There were several. So we are going to begin today with the introduction and discussion of the NCOIL Model Act regarding insurers' use of artificial intelligence. This is the first time the model is being discussed here at NCOIL, and we will not be voting on it today. And you can view this model on page 34 of your binders, and it's also on the website and the app. Before we go any further, I will turn things over to the sponsors of the model, that is New York State Assemblyman Eric DeLon and Oklahoma Representative Forrest Bennett. Assemblyman DeLon, you have the floor, so please go ahead and make any comments you'd like.
Thank you, Chairman Gandolfo, and I just want to say that I'm proud to sponsor this model along with Representative Bennett, and I think that this is a great opportunity for NCOIL to provide guidance to states on what is arguably the most frequently discussed issue in our representative legislatures. This model is pretty straightforward in that it states that AI may not serve as the sole basis for determining whether to adjust or deny a claim, and that an insurer's decision to deny a claim or any portion of the claim must be made by a qualified human professional. I do want to stress that the model before you is really meant to be a conversation starter, and as some of you know, some states have already passed legislation with a similar concept on the health insurance side of things with prior authorizations. So I think it behooves us as policymakers to at least discuss whether or not the concept makes sense across all lines of insurance. By no means do we intend to rush this, especially since this deals with such a rapidly changing part of technology. And I look forward to hearing from the panel today and everyone else that may be involved. We did do a brief hearing on this in Charleston. So I just look forward to continuing that discussion today. And with that, Mr. Chairman, I turn it over to Representative Bennett.
Go right ahead, the floor is yours.
Thank you, Representative Gandolfo, and Assemblyman. I'm not from New York.
Representative sounds better.
It's really hard for you to tell the difference between us. I don't have a whole lot to add. I appreciate your words. I'm happy to be doing this in a bipartisan manner. And like he said, this is a conversation starter. And it's already worked, because as soon as I walked into this meeting yesterday and today, like every third conversations have been about, hey, I want to talk about AI. And I get it. I understand that there are a lot of concerns. The reality is, though, I think a lot of us have seen AI-related legislation across the policy board in our home states, and at least in Oklahoma, some of it's been laughably bad because AI is expanding and developing so rapidly, and government is moving at the speed of government, and we all know that can put even insurance experts to sleep. So I'm looking forward to the next couple of meetings or a couple of years of conversations around this, but I want everyone to know that, at least for my part, this is about making sure that there is humanity in the process, especially when it comes to initial rejections of claims. I think everybody, if they sort of sought it out, would have somebody in their personal sphere of influence that has had an issue with this. And we just want to make sure that as policymakers, we're not letting AI run away with getting the humanity out of healthcare, because I think that's really important. So, Mr. Chairman, thank you for the time, and I look forward to these discussions.
Thank you to both of the sponsors. And before we go any further, Representative Castle from Florida, I believe, has some remarks to make about the experience of Florida with this particular bill. So go ahead, the floor is yours.
Thank you so much, Assemblyman. My name is Representative Hillary Cassell. I am located in Broward County, Florida. I serve as the Vice Chair of the Insurance and Banking. I've spent 15 years of a 20-year legal career in the insurance space, specializing in property casualty. And I'm known as a very pro-consumer, consumer-focused legislator. And over the summer, as I was beginning to craft what my 2025 legislative session would look like, obviously the unfortunate tragedy of the killing of Brian Thompson was top of mind. And as I looked further into that, there were some reports about potential motives related to AI denials. And digging even further into that, there are several lawsuits across the country where allegations of AI denials at very high rates, 90% or such a massive amount of denials occurring that it's taking 1.2 seconds for an insurance company to deny a claim. So really just trying to be forward thinking and how we can protect consumers. We filed a bill that was relatively restrictive and similar to, as you mentioned, Representative, as soon as the legislation was filed, we heard from stakeholders. And the bill eventually was amended this past legislative session to really mirror more of what we see being presented in the model here today. Because really there are so many positives to AI, and we want to make sure that carriers have the ability to utilize those tools for all the right reasons, whether it's customer outreach or denying a claim because something is wrong, whether it be a date of birth in the healthcare system or a policy number being wrong. So AI is really efficient and can be effective when used properly. So trying to strike that balance is still something we are working towards in Florida. I will say that we did not pass it this legislative session because we received so much positive response from all stakeholders wanting legislation like this on the books, but wanting to make sure they had the tools still available, that they weren't completely prohibited from using AI in this space. So I'm looking forward to bringing it again next year. One of my Senate sponsors, it actually found its way in 2 different Senate bills, recently was appointed yesterday as our new CFO overseeing our insurance regulation in Florida. So I'm hopeful as our new CFO, he'll be just as supportive of this type of legislation, but it's definitely moving in the right direction and making sure we strike that balance of protecting consumers and giving carriers the tools they need to be efficient and effective.
Thank you very much for that perspective. We are now going to move to our panel to discuss the topic. We have some great panelists here today, and we look forward to hearing from them. And we will start with Jim McDermott, VP of R&D Health Plan Products for Epic. And we will please hold questions until all of our panelists have finished. And Jim, go ahead, the floor is yours.
All right, good afternoon, folks. My name is Jim McDermott. I work in software development at Epic out in Verona, Wisconsin. Appreciate the introduction, and it was great to hear it from the representatives. I think we're very well aligned in what we're trying to accomplish and what we feel like is the appropriate use of AI in healthcare. So a couple of things that I'd like to share with you. One is just a quick background of Epic and what we do in the industry. I think that'll provide some color commentary on where we're coming from and what some of our perspectives are. And then I want to share a few of our recommendations for any model legislation you might be considering. So first, Epic is a healthcare IT company that was founded in Madison, Wisconsin back in 1979. We're fully employee-owned, privately held, and we're focused first and foremost on helping providers and the patients that they care for. Today, the vast majority of our 14,000 employees work outside of our campus out in Verona, Wisconsin. We build all of our technology in-house, and we're very proud of what we do. We do offer one of the most widely adopted electronic health record systems in the nation that provides clinicians and their support staff with the technology and the insights they need to care for their patients every day. Our EHR is used by many of the largest and most prestigious health systems across the country, and also a vast majority of federally qualified health centers, pediatric hospitals, and more. You also may be familiar with MyChart. That's one of the products that we make. It's a health app used by over 180 million Americans to manage their health and interact with their health system. Beyond that, though, our customers commonly consider what Epic does to be part of their central operating system. In addition to the EHR and tools like MyChart, We power scheduling, billing, referral management, claims processing, and I think notably for this conversation, a lot of the prior auth workflows that go on within health systems. In our mission to improve the healthcare system, we also work with a growing number of health plans. We offer full health plan administration software, so that's claims processing, utilization management, care management, et cetera, primarily focused on nonprofit, regional, and provider-sponsored plans. They use it to manage benefits, pay claims, and review auth requests. So I think when you put this together, hopefully you can see where we have a bit of a unique perspective on the technology that underpins a lot of these processes today. We manage a lot of the operational workflows for providers and their support staff as they're interacting with health insurance. And then we also have software that helps health insurance companies adjudicate those claims, process those authorizations, et cetera. So that's the background on where our feedback comes from. We also been focused on being on the forefront of generative AI and its use in healthcare with all of its complexity and nuance. Within just a few months of the release of ChatGPT back in late 2022, we had embedded generative AI into our software, and since then it's expanded quite a bit. These tools are currently being used to help oncologists identify lung cancer sooner. It's helping to reduce clinician burnout by streamlining documentation, better summarizing complex medical records, and it also helps back office staff in coding, billing, and prior auth workflows. So that takes us to prior auth, which I think is one of the most impactful areas to talk about when it comes to the use of AI in insurance flows. So many of you are probably familiar with this, but the process of prior authorization is a complex one. It often involves evaluating the service for medical necessity, using significant human time on both sides, both from providers, their support staff, and folks on the health plan side. It's really a data abstraction problem. Folks are looking through reams of clinical documentation and trying to compare it up against the medical policies that the health plan has on file to determine clinical appropriateness. And this burden is either borne by providers and their support staff as they're clicking through portals to answer questionnaires that the health plan has served up, or it's being borne by health plan staff as they're looking through mountains and mountains of clinical documentation to try to understand whether or not that service is medically necessary. No matter who's doing it, it's really time consuming and it opens up a lot of space for mistakes. And we see that every day across the country. So nowadays, AI is already being used by both providers and payers to start to simplify this process. It's a journey, but there's a lot of good progress that's been made. Health systems are using this to get authorization information to the plan more accurately. So the AI is pulling the important information from the clinical chart to send to the health plan to adjudicate it. And likewise, payers are now using AI to try to understand that clinical record to more quickly determine medical appropriateness. I do think, though, and I think it was noted before, AI is continuing to advance at a rapid pace. And as these foundational models continue to advance, it's not unreasonable to picture a future very soon where the AI can do a large portion of the non-controversial approvals where a service is being rendered and there's appropriate clinical documentation to support that. And we should welcome that future. So this takes us to our perspective on some of the model legislation as well as some of the state-specific legislation that has come out over the last year and a half in the AI space. So I'm certainly optimistic about the promise of AI to solve some of these challenges that the healthcare industry sees and the administrative burden endemic to prior authorization. But of course, I think we all know we need to be mindful of the risks as they were noted before. AI, and in particular large language models, as we all know, can still hallucinate and it can arrive at incorrect conclusions. That's not going to change anytime soon. And even if the AI was perfect in the task it was given, I think it's important that we all recognize that medical knowledge and medical policy is constantly evolving. I think qualified human review is always going to be necessary to both protect against those errors, as well as to make sure that we can apply the appropriate clinical judgment when facts might not neatly fit established policy. So let's get into some quick recommendations we have. First, there was some discussion on should we consider all types of insurance or focus on healthcare. It's our perspective that it's probably best to focus on healthcare independent from other types of insurance. There's a couple of reasons for that. One is ultimately health insurance plays such a key role in someone's access to healthcare. In the managed care space, insurance is not just a way to pay for care, but it often serves as a way to manage utilization and influence the care that someone receives. Prior authorization in particular is a unique process to health insurance that takes special consideration and we think warrants special consideration. Second, as we look to create any any legislation over AI, I think one of the most challenging things is defining what AI is from a regulatory perspective. We've seen some inconsistent definitions across states, and it's actually deceptively hard to get right. So it's one that I encourage you to be very thoughtful of, and we and others are very happy to provide feedback on what constitutes a good definition. An overly broad definition of AI, as was noted before, can encompass use of almost any technology or algorithm, even something that's completely deterministic and rules-based, which can then inadvertently force human review of a lot of administrative busy work that can otherwise be automated. That just delays getting an answer back to a provider, getting an answer back to a patient, and doesn't serve anyone. So we don't want to add human review to these kind of black and white processes that have been automated for many years already. So we do think it's best to focus the language on anything that is probabilistic and generative, really focus on these new types of AI that may produce a different answer with each input, and really are trying to replicate human intelligence into the artificial intelligence. Finally, I think our final recommendation would be that we really focus on the activity that has the most potential to bring harm to patients if it's done poorly, which is adverse determinations of medical necessity. Ultimately, I think there's a huge potential for AI to simplify the prior authorization process and expedite approvals of many of those routine or commonplace procedures. We should support that. We should embrace that. We should do what we can to make sure that providers and doctors can get answers to prior authorization requests in real time at order entry and not inadvertently create more headache for them. I think we can all appreciate, though, it's inappropriate for AI to make adverse determinations or denials, or as was noted before, be the sole source of a denial anytime in the foreseeable future. I think it's just so important that we keep clinician review to apply that judgment and to make sure that folks have an opportunity to evaluate what is appropriate for that patient. That wraps up my remarks. I do think AI holds tremendous promise for healthcare, and I welcome opportunities to help engage with you all in the future. Thanks.
Thank you, Jim. Next, we will go to Emily Carroll of the American Medical Association. Emily, please go ahead. The floor is yours.
Thank you so much, Chair. I'm Emily Carroll. I'm a senior attorney in our advocacy department at the AMA, representing physicians and medical students, and it's a real pleasure to be here, and we're so grateful to this committee for taking up this issue and looking at state legislation. We know that health plans and third-party vendors are using AI or automated decision-making tools to deny care and reduce access, and we know it can result in real patient harm. From the physician's perspective, we're really excited about the prospect of AI, especially in terms of reducing administrative burden so that physicians can spend more time with their patients. That said, we think safeguards and guardrails are absolutely needed, and we're glad that NCOIL is looking at this. So we are particularly concerned about the use of AI to determine medical necessity in either the prior authorization or utilization management space. A recent survey of our own physicians found that 61% of physicians report they're concerned that AI will increase, or it already is increasing denial rates. And we know that can happen what can happen when inappropriate denials happen. Too often, we put guardrails just around sort of the appeals process. We're really advocating to make sure that these guardrails are applied to the initial review. And that's because I think what we find is that physicians don't always appeal claims, right? We know those, up here I have 75% of physicians say denials have increased in the last 5 years, but only 20% say they always appeal, and this can be perceived outcome, lack of resources, or urgency of care. A Kaiser Family Foundation study found that 11.7% of Medicare Advantage prior authorization denials, were appealed, but when they were appealed, 81% were overturned. So really, when you do appeal, it shows largely the initial determination was frequently wrong. And we know that claim denials can result in real patient harm, including treatment delays, a decline in health, and paying more for care than was expected. And I think AI has a real potential to exacerbate a lot of those problems when used to deny claims. We're seeing a lot of activity in the states, as you all know. And I think broadly, what we're seeing is an attempt to ensure that a physician or a qualified clinician is the one making a negative determination, or we would say, hopefully it's a physician who is qualified to treat that condition. We're also seeing a lot of activity around increased transparency, so really making sure that patients and physicians are aware of the AI tools that are being used to make those decisions. Earlier, or I guess late last year, the AMA put together a set of policies around the use of AI in healthcare. And we have a particular specific section on the use of AI by health plans and payers. And I'll just go through a couple of the principles that I think we would hope you would consider as you move forward with this legislation. First, regulatory oversight, transparency, and ongoing monitoring is appropriate and needed when AI is used for coverage claims and benefit design. A denial based on medical necessity is the practice of medicine and should be done by a physician licensed in the state of the same specialty and with experience treating that condition. We should ensure that AI is not exacerbating existing barriers to care by replacing assessments of individual patients and the patient's needs and circumstances. And we need to make sure clinical criteria is evidence-based and available to patients and physicians. I think as you all consider moving down the road toward a model bill, both the qualifications of the human reviewer on the plan side, as well as transparency, are two critical components we would suggest. So I'm happy to share our principles around AI with Ann and the group, but we really are looking forward to working with you as you move forward on this bill, and we thank you for this opportunity to speak.
Thank you very much, Emily. Next up is Jill Ricard from the American Council of Life Insurers. Jill, go right ahead.
Thank you, Mr. Chair. Can you hear me? Is this on? Okay, great. I am Jill Ricard with the American Council of Life Insurers, and I just wanted to provide very brief comments as you begin this process as it applies to our life insurance industry. Life insurers are increasingly leveraging technology like AI to improve their interactions with customers and make it easier and more convenient for the modern consumer to get the financial protection they need. This really includes greater use of technologies that simplify the underwriting process. In claims reviews, AI can improve efficiency and accuracy of the process, as was mentioned. It can minimize human error and ensure that the same criteria are used across all claims, providing consistent and fair evaluations. There is a need for human oversight on the use of AI systems in insurance, but that oversight should be focused on the accuracy of the system and how it functions, not on every single decision made, which would defeat the purpose of using AI in the first place. The proposed model would severely curtail the use of AI in claims review among all lines, including life insurance. And we're concerned that that could lead to longer decision times and increased expenses without providing consumer benefit. Before moving forward with the model and such a complex and ever-changing technology, we would urge you to step back and determine the specific issues in each line of insurance that you're seeking to remedy. So we didn't provide a red line of our comments on this draft model because our comments would have requested that life insurance be exempted, and that wouldn't be useful. But really, you should consider, does it make sense to require a human to make a life insurance claims decision by, for example, manually checking a policyholder's name and social security number against the death master file to confirm the policyholder has died? We don't think that would make sense, and that's what the model would require. Our members also offer other products that may give rise to other concerns, for example, long-term care, disability income insurance, and supplemental and exempted benefits such as dental vision and hospital indemnity. All of these lines use the technology in different ways for different purposes, and it's important to understand these uses and outcomes that you seek to achieve in each case, rather than moving forward toward a one-size-fits-all approach. A specific issue I'd like to mention as an example of why the model would be problematic for our members in particular, there is no definition of claim, and therefore the model would treat a technical claims decision the same way that it would treat one that requires clinical judgment. Why would a human be required to make a decision to deny a claim based on the fact that the subject of the claim is excluded from coverage within the contract? That would increase costs, but not provide additional benefits or protection for the consumer. The requirement of human review should be dependent on the nature of the claims decision. Administrative decisions that are not open to interpretation should not require human oversight. Another example would be in dental insurance. A company should not need a human to deny a claim for a third tooth cleaning when the policy only provides for 2 cleanings in a 12-month period. Again, that would add cost but not benefit. So thank you for the opportunity to provide brief initial comments on this effort, and we do continue we look forward to continuing to work with you on the subject of AI, but urge you to really pause on model development to engage in a more focused and detailed review of its usage in each aspect of our industry. Thank you.
Thank you, Jill. Our next speaker is Lindsay Kwarkowski from the National Association of Mutual Insurance Companies. Lindsay, go ahead.
Thank you. Can you hear me okay? Awesome. Thank you, Mr. Chair and members of the committee. My name is Lindsay Klarkowski, and I serve as the Policy Vice President at the National Association of Mutual Insurance Companies, covering data science, AI, and cybersecurity policy. On behalf of myself and on behalf of NAMIC membership, we thank you for the opportunity to comment today. NAMIC appreciates the committee's time and attention to the topic of artificial intelligence and insurance, as the use of AI in our industry promises numerous benefits for both consumers and for carriers. Where other policymaking bodies have instinctively jumped to overly burdensome regulation without first understanding different AI model types, applications, or benefits, we believe there is opportunity for NCOIL to intentionally study and understand whether there is even a need for new legal frameworks, and for NCOIL to avoid imposing unnecessarily restrictive measures that would prevent consumers and industry from realizing the benefits of AI. Our comments today are therefore foundational in nature. Importantly, as NAMIC presented on in spring, AI is not a new technology. AI development and use stems back to the 1950s, and traditional AI models like machine learning models have been used in everyday life. Think of your spell check, your Face ID, the Amazon Alexas in your home, as well as in insurance through the use of things like generalized linear models that are used by actuaries, all for quite some time. There had been no prior discussion on the need for new laws addressing AI in insurance because AI is a tool used in cases that are already governed by existing law. Regardless of whether AI models are incorporated into a process or not, existing statutory frameworks equally apply. The onset of ChatGPT has certainly spurred much policymaking attention, given that it demonstrates an incredible advancement in AI technology, but there has yet to be a comprehensive, thoughtful discussion around the wisdom of creating new laws specific to AI in insurance, or why a need for legislation aimed at AI in insurance has changed. To date, even with ChatGPT's demonstrable advancement, all underlying AI use cases and outcomes are already contemplated by the existing insurance codes. For these reasons, NAMIC has not provided edits to the current exposed model draft, as we do not believe there is enough merit in the foundation of the draft from which to edit and achieve a result beneficial for all stakeholders. We find that the fundamental premise of the draft mistakenly assumes that use of AI creates a higher degree of risk to consumers than human decision-making, and also does not recognize how existing insurance claims laws and practices already apply. Further, the draft model would quickly become outdated as the technology continues to advance, and this is a perspective that NCOIL itself has acknowledged, including in its recent comments to the NAIC Big Data and AI Working Group on its model law efforts, where NCOIL stated that, quote, AI is evolving so rapidly that legislative attempts around it might be difficult to keep pace, end quote. Existing tool-neutral law, however, does stand the test of time and remains flexible in application because it is focused on use cases and outcomes. By way of example, we do not have insurance law aimed at calculators, at computers, nor at Excel spreadsheets themselves, and these are all tools used in processes that impact insurance consumers because existing insurance law is aimed at those use cases and outcomes, and it applies regardless of the tool used. We believe that NCOIL should therefore refrain from pursuing this model draft effort and instead approach AI in insurance through 1, education and understanding the different uses and transformative benefits, 2, providing clarity that existing law applies and then identify any perceived gaps and have robust discussion over those gaps. And 3, limiting duplicative and conflicting requirements stemming from extraneous laws and regulatory efforts aimed at AI. So thank you for the opportunity to comment, and I'm happy to take questions when everybody's had a chance to speak.
Thank you, Lindsay. And moving right along, we will now hear from Hillary Segura from the American Property Casualty Insurance Association. Hillary, nice to see you. Go ahead.
Thank you, Mr. Chairman, members of the committee. I will keep my comments brief. Hillary Segura, American Property Casualty Insurance Association. I'm going to echo the sentiments that have been expressed by ACLI and NAMIC so far, that a model is premature at this time, and we would request that NCOIL do further study regarding the specific risks that are applicable to the specific lines of insurance. I do appreciate the comments that the sponsor and co-sponsor made, that they're not looking to rush the development of a model, and that this is the beginning of a conversation. Similar to Lindsay's comments, that existing provisions of the insurance code in every state are flexible enough to effectively regulate AI use as another tool used by insurers, just like the insurance codes have accomplished previously for other technological advances, such as email or social media. Insurance codes have created the critical, time-tested, and proven effective balance of consumer protection and support for solvent, competitive, and innovative insurance markets. I do want to mention the NAIC's AI model bulletin does appropriately recognize and embed state insurance codes at and as its core, and its provisions reflect the breadth of your insurance codes, addressing governance, risk management, and consumer information, for example. The wisdom of that approach is being borne out by the rapid adoption of the bulletin, at least 24 jurisdictions to date, and the fact that it has become the de facto national standard for the industry. At the same time as additional guidance specific to AI becomes necessary on issues such as regulation of third-party vendors and state insurance codes, and regulators acting under them are quite capable of evolving the necessary refinements and regulation consistent with the critical balance inherent in state insurance codes. And I would just end with saying it is vitally important, not only for the industry, but for the preservation of state regulation of insurance, for state insurance legislators and regulators to continue to work together so as to discourage intrusion into insurance regulation by other entities with other agendas. Those entities would inject different and even contrary standards into insurance regulation, and that would upset the critical balance in state insurance regulation and thereby jeopardize the markets that you have helped build and effectively regulate. We look forward to the continued discussion on this issue. Thank you.
Thank you very much, Hillary. Next scheduled is, who do we have here? We have Miranda Motter from America's Health Insurance Plans. Do you have anything to add?
I'll just quickly add a couple things. Mr. Chair, members of the committee, Miranda Motter with AHIP. Thank you for the opportunity. Just wanted to say a couple of things. One, so appreciate the earlier comments about how important it is to have a balanced approach. Secondly, also so appreciate that this is a conversation and that, there is a lot, I think, of just learning and really understanding what is happening. The other thing I would say is really echoing the sentiment of the rest of the industry here as it relates to how highly regulated, all of you know how highly regulated the insurance industry is, particularly the health insurance industry, as you think about how highly regulated we are from HIPAA, from unfair discrimination, from many of the federal, state laws and legislation. And it's really important, Hillary noted this, the NAIC bulletin, certainly it's been adopted in 24 states so far. But what is really important there is that the NAIC was very deliberate in recognizing that all of those federal and state laws apply, and it doesn't matter which mode an insurer may use. And so that's really important. I know the example of, having spreadsheets. I think during the last NEIC meeting, there was a great example of not regulating the use of a knife, but the outcomes of a knife. And I think that those things are really important. So NEIC, certainly very important to really understand that bulletin. The other thing that I would say is, certainly states have been looking at this. I would note that I think we understand that even in Colorado, where that state law has passed, they're looking at a special session to fix some of those things. And we do know that two state governors in Nevada and Virginia actually vetoed legislation because I think there was a strong recognition that AI technology has such advantages for innovation, and that there was concern that legislation could potentially be stale in time and inhibit that innovation. The last thing I would just say is, to be really clear, health plans are not using AI to deny prior authorizations based on medical necessity, based on clinical factors. So I know that was alluded to, and just want to be really clear in my closing comments as it relates to that, and thank you.
Thank you, Miranda. Next, we will move along to JP Wyski from American SureTech has some comments he'd like to add to this as well. JP, the floor is yours.
Yeah, thank you. Very briefly, JP Wyski, representing the American InsurTech Council. We have about over 100 InsurTech startups, as well as legacy carriers and information providers. We do have some concerns with this bill. We think that this is a good start for discussion, but probably nowhere near where we end up. Similar to others, we will also echo the interest in the NEIC's AI bulletin. The fact that there's a governance process, that AI is just another tool, is an important thing to understand. And the fact that there is and should be a governance review that applies to all insurers of all lines to sort of understand how they're using AI, as well as making sure that they've got processes in place that are documented and are working closely to ensure that they're making sure that consumers are protected. So that's the extent of our comments. So thank you for your time.
Thank you, JP. And moving right along to Scott Harrison with the National Alliance of Life Companies. Scott, go right ahead.
Thank you. I'll be very brief, as well. The National Alliance of Life Companies, for those of you who don't know, is an organization, a life trade association of smaller, mid-sized, and specialty carriers. Our members look at InsurTech and use of AI and innovation insurance as offering them tremendous promise and advantage to help them compete, develop new products, and really to serve underserved markets, which many of our members are highly committed to serving in that underserved community and expanding their services, their products into that community. And so we would just, again, as JP said, appreciate this is a good way to get a conversation going, and we'll be happy to offer our comments. But just as a general comment going forward, we just encourage you to think about the impact on innovation, on any attempts to regulate this space and how you do it, because AI and InsurTech offers great promise and great opportunity for consumers and benefit consumers. We want that to happen. We do want the appropriate level of governance and regulation, but we just ask you to keep that balance in mind as you go forward. Thank you.
Thank you for your comments. And last but most certainly not least, we have Randy Chapman with Blue Cross Blue Shield. Randy, go ahead.
Thank you so much, Mr. Chairman, and thank you to the committee. Randy Chapman, Blue Cross Blue Shield Association. Our association represents the 33 Blue System companies. I'm sure many of you have a Blue card in your pocket, and thank you for that. I could just say ditto to echo many of the sentiments of my industry colleagues. We too urge you all to approach this with the collaborative and open effort that you have started here today. We do urge you all to consider the needs of the individual sectors. There are several state and federal regulations and rules out there that the health insurance industry in particular has to adhere to, HIPAA, for example, and many, many others. And so I just say that to note that the concerns and the issues with AI across insurance sectors is very different. We all want to see increased efficiencies and increased and decreased pricing, increased effectiveness for our members, for consumers, for your constituents, as well as for the industry and for the government. So again, we will have comments on the model as you all further your discussion, but we just encourage you to just continue to have an open and collaborative conversation about this. Thank you so much for your time.
Thank you, Randy. And now we will open the conversation up to all the legislators here. So any questions? We got Representative Lehman.
Thank you. So to kind of dig a little bit deeper, I've heard the NEIC rule stated, and I think it's a good start, because I think one thing in this model, I'll refer maybe to the co-authors on this, co-sponsors, is it looks like this is dealing with claims, use of AI in claims. And I think the bigger issue is going to be, in the near future, is going to be the use of AI in underwriting and claims. And every aspect of insurance is going to be touched by AI. And I think that we here, as legislators, in setting the benchmarks, have to make sure we're very clear on where you can and cannot go in the use of AI. I serve on our AI task force back in Indiana, and one of the questions I asked the AI expert is, how do you stop bad AI? And he said, with good AI. We are in a world now where AI is going to drive the ship on a lot of this data, and I think we need to, as legislators, be very clear that any model we adopt going forward, I think needs to go beyond claims. I think it needs to deal with underwriting, it needs to deal with auditing, it needs to deal with a lot of things that the NEIC has started touching on. But I think I applaud the sponsors for where we're at. I think it needs to be broader. So I do think we need to go longer on this issue, but I think we need to also dig a little deeper.
Thank you. Next, Representative Keicher.
Thank you, Chair. So again, kudos to the sponsors for starting the discussion. I think it's a very important discussion that needs to start. But in reading the proposed language, I think we need to be very careful that this really be specific to when folks are being told no, right? Imagine a scenario where you have an image of a house before, when you're underwriting it on the front end, you have an image of the house after a storm strikes, and it auto-generates an initial claim payment out to the policyholder within minutes of having a file. So I think where it's pro-consumer, we need to allow that to happen and make sure. I think if the consumer is being told no, or the consumer is being put in a bad place, I think that's where this is very highly appropriate. And we need to remember, again, Rep. Lehman, I love the term, how do you stop bad AI with good AI? Because it's just a tool, right? We need to think of AI like metal. You know, metal is great if we use it to make pots and pans and cars. Not so good if we use the knife example, right? You can hurt somebody. So we got to have rules about how you can use the knife, right? So I think with AI as well, where that personal harm comes in, we need to be very careful. But if we're using it as a tool to further the benefit to the consumer in our states, we have to allow it. So just some commentary. Thank you.
Thank you. Representative Bennett, do you have a question or comment?
Yeah, thank you, and I appreciate the comments. I think there were some lies because several people said they look forward to discussing this, and that's clearly not true at all. And Lindsay, I want a copy of your comments because that was the nicest way to say we don't like your idea at all. That was incredible. Doesn't merit suggestions for an amendment. Amazing. I'm in the super minority in Oklahoma. I don't get that treatment at home. This is incredible. I love it. One thing that I did hear a few times was, and I appreciate this, that we don't want to stifle innovation. My motivation, at least in this, is just that humane, empathetic element at the end of the process where the patient finds out whether or not insurance is going to cover their claim. And this is a genuine question, can you help me understand where that aspect of this could hinder innovation? And on the flip side of that, I want to see AI expanded in its use. And again, another milestone, Republican, Lehman over there from Indiana, go Pacers, wants bigger government. Did you hear that? He said he wants to expand it. He wants big government. I mean, the thresholds we're crossing with this conversation are amazing. But I think that I see this as an opportunity for human people to be able to spend more of their time thoughtfully considering the claims that are initially rejected by an AI program. And so I wanted to provide that context as well, because I don't think that I covered that in my initial comments. And I genuinely want to know, as we have this conversation, what to look for as far as avoiding the hindering of innovation in that particular part of the process.
Thank you. Seeing no other question, oh, we got one more.
Yeah, it's both a question and a comment on, when we talk about, first, I'm a big proponent and supporter of artificial intelligence in its use on insurance products. But I think when I look at the history of how we process claims and the burden shifting to our medical professionals to try to get claims and get the coding approved, to get pre-authorizations, et cetera, the amount of back office that we require, and the way we lay off expenses on our medical providers, I think that's unacceptable. So if we're going to move forward with artificial intelligence, at some point I think it has to be a review of how we process the applications for claims, how we adjudicate those claims, and how quickly we resolve the claims, and what the denial levels are, and the speed of adjudication. I mean, cases in point, I put in a claim about 4 months ago, and I was cleaning out my desk, and I was like, God, I haven't heard anything. And I called up, and it took me an hour and a half to get an answer from an insurance company that they couldn't read the claim from April. So then I had to send them a new copy, and artificial intelligence looked at it, and they said, we can't see the phone numbers. Phone numbers were printed at the top. So there's a lot of, I think as we look forward, I think as we look at legislation, we should look at the consumer groups, whether it be medical professionals, whether it be the insurance brokers, on the experience they're seeing with the incorporation of artificial intelligence in the rollout of products. Because one of the things is the experience in buying insurance and adjudicating claims needs to be more constructive and more positive. I don't think any of us, given the history of this last year, would turn around and say that we're adjudicating things, administering things in a way that's creating a better experience for our constituents, whether they be individuals or the medical profession. If I go to any medical office and ask what it's like to call an insurance company, it's about a half hour that they chew on my leg. So those issues, artificial intelligence needs to address a lot of those issues, as well as your ability to turn around and provide a service, because it's how I get into the process and how I get out of the process, and we need to measure both of those. So I think I would say we want that feedback loop from the sellers of insurance, being the brokers, the doctors, and then the constituents who are trying to get their claims adjudicated. So because we want to judge, has artificial intelligence improved everything and not just the bottom line for the underwriter? That would be my concern. So I just want to tell you that I don't think we're there yet. I don't think we've gotten there as a process. So I'd like to hear that those are parts of the goals of when we ever get to legislation, because I'm not suggesting we need to do it tomorrow, but those issues of back office processing, that you're not laying off more work on third parties to get a claim adjudicated, that we're getting the process quicker, and that maybe the reduction in costs could potentially lead to reduction in premiums if we can solve and automate more of the process. And that would be it. Thank you.
Thank you very much. Representative Scott.
Thank you so much, and thank you to the sponsors of this legislation. I think that it's incredibly important that we look at this here in Pennsylvania. I mean, not here in Pennsylvania, we're in Illinois, but back in Pennsylvania, rather, we are definitely having robust conversations about this. And for me, what it comes down to is, I think one of the legislators said it in a previous session, is there needs to be a level of transparency, requiring that consumers and regulators know that health insurers and people in this space are utilizing AI, which would be the step number one. And then I think the step number two is, how do we make sure, especially when it comes to the healthcare space, that or the claims review process, especially in healthcare, how do we make sure that those reviews are grounded in clinical evidence right? Who's monitoring that? Are we going to take the word of the health insurer, the health company, to say, oh, it's grounded in clinical evidence, or is there an independent review by a regulator? Are we giving parameters to regulators to determine that? And then and that's incredibly important, especially for constituents that I represent in marginalized communities, which have been disproportionately impacted by these AI claims. Right? How do we make sure that it's grounded in clinical evidence and not by the stuff that, and not by the rest of the muck that's out there in the internet sphere, if you will. And so, one, I just want to say I think that we need to definitely tackle this. Now is not the time to sit back and wait, so I'm really proud of the co-sponsors, but I do think that we need to make sure that transparency when it's being used, and then also making sure that there's an element that says that the algorithms that they are using is grounded in clinical evidence, and there's some type of review of that algorithm separate than the actual company is incredibly important. Thanks.
Thank you. And seeing no other, we do, Representative Cassell.
Thank you. Yeah, I just wanted to comment. Obviously, everything that was stated here today is really what I heard a lot this past legislative session of what the concerns were. But anytime, I'm a big believer, anytime you have both sides pretty fired up about an issue, I think it means we're onto something. And the reason why we narrowly tailored it so much specifically to just focus on the claims component is where is the harm being done or allegedly being done, or where's the potential for harm to consumers, which is why we need that balance. And that's why we focus specifically on claims denials rather than other components like underwriting, because that is primarily where you're going to see the consumer have the most difficulty when a denial is received through that appeal process, or through having to get that letter and get that denial and then having to take further steps to address it. So we really wanted to narrowly tailor it because we do want AI to grow. We do want AI to be a resourceful tool, but we are already seeing evidence out there that it can be used for harm, and that was why we why we so focused it on the claims handling. So the conversation has been very exciting here today, and I look forward to assisting any way I can with the panel as we move this further.
Okay, now, thank you for that. Now, seeing no further questions, I will just say I agree that it is going to be difficult for legislatures and organizations like NCOIL to keep up with advancements in artificial intelligence. But I don't think that means that we need to stay out of it completely. I just think we need to find the right balance. So for today, it sounds like this Model Act is marked as room for improvement, maybe tightening some definitions, looking at some potential exemptions. But overall, the start of this conversation has been great. This is what makes NCOIL such a strong organization, is this collaborative back and forth that ends up with a finished product that is good for both consumers and does not bog down the industry so much. So thank you to our panel. This was very informative. Thank you to the sponsors for bringing this forth. And we will now move on. You are dismissed. And we are now welcoming, we're very fortunate to have Louisiana Insurance Commissioner Tim Temple with us today to speak about new initiatives to combat insurance fraud that have been implemented in Louisiana. He will be followed by Craig Sepich from the National Insurance Crime Bureau. Oh, hold, please.
Sorry about that.
Okay. Next up is a discussion on price controls and rate review and their impact on insurance markets. I spoke too soon. First, we will have former New Jersey Insurance Commissioner Holly Backey, followed by Sabrina Corlett, founder and co-director of the Center on Health Insurance Reforms at Georgetown University. The basis for this topic is to hear different perspectives on how price controls and rate review can impact insurance markets. Commissioner Backey will be addressing property and casualty from the property and casualty perspective, while Sabrina will address the health perspective. It's okay. And the basis for their perspectives are two respective white papers on these issues, which you can find on the website, in your binder, and in the app. Commissioner, thanks for being here. You may go right ahead.
Well, thank you for having me, certainly. First of all, it was mentioned, my name is Holly Backey. I am a former New Jersey Insurance Commissioner, who was faced with quite the dysfunctional auto market. So I want to share with you today a cautionary tale about what can happen to your constituents, about the phone calls you get in your office from consumers who are required to buy auto insurance. And what many do not realize is that they could be paying lower premiums if the market was a competitive one. So I want to briefly talk about competition from two perspectives. One is research, and the second will be looking at the New Jersey experience. So we know that there are market pressures. And one of the things that's hard for all consumers to understand is that inflation, a market pressure, is going to impact their premiums. And in a second, I'll show you a chart that looks at what those changes, those inflationary changes have done. But for right now, I want to focus on what I call the unintended consequences of a market that's not a competitive one. You know, strict regulation, well, residual markets grow. New Jersey's ended up being over $4 billion. Insurers leave because it's not a good place to do business. But worse for your constituents is cross-subsidization. You try and explain to good drivers in your state why they're subsidizing bad drivers. Try to explain to people in your state why, if they pay for their insurance, they're subsidizing uninsured drivers. And that, again, is just two key points from some of the research. In terms of, and the cost, wait a second, okay. All right, anyway, I apologize, the inflation chart isn't in here, but I will say to you that the chart shows that the rate of inflation overall was much higher than the inflationary impact on private passenger premiums and commercial auto premiums. And I think that is due in part to companies wanting to compete, but it is also certainly due to the rate review work done by regulators. So what does the competitive market look like? Well, the key elements, risk-based pricing. And we all know that what's insurance supposed to do? The premium's supposed to match the risk, and it doesn't. It's distorted by the subsidies that I just mentioned. What about promoting competition and regulatory flexibility? Competition is giving insurers the ability to adjust their products and their prices quickly to compete. And that flexibility is absolutely essential. And finally, and perhaps most importantly, is we can never stop taking care of protecting the consumer. And that has to do with solvency. If you artificially suppress rates, you are putting your constituents, your consumers at risk for financially troubled or impaired companies. So the financial health of the insurance companies is critical. So here's New Jersey as the living proof of how everything goes wrong. And I do mean everything. Our residual market, way over $4 billion. 26 insurers left our state. They formed New Jersey-only companies, which limited the capital they had available to provide auto insurance. And we had one governor who said, isn't this great? Everybody's so upset about high auto insurance premiums. Everybody's rates are going to be reduced by 15%. That was irrespective of the financial position of the company. And finally, the thing of most concern to me when it comes to protecting our consumers, because that's what regulators did and do, 28% of our companies were under regulatory watch, right? That meant they were in financial difficulty. So what does this look like? I don't know, compare this to what's going on in your state. We had years of consumer, company, and political frustration. The NAIC ranked as #1 in premium cost every year. It was the headline in the newspaper. We hid rate increases on Fridays when they still published newspapers, so they'd only come out on Saturdays. Everybody was angry all of the time about auto Because insurance with restricted rating options, insurance companies were afraid to lower their rates because they didn't think they'd get the rate back. We played a game, and the game was, I'm going to ask for more than I need because I know the regulator's going to reduce it. Do you really think somebody wants to come in with a real rate increase over a period of time because the regulator will honestly assess the real rate need? Or are they going to have the political consideration with a capital P or a small p, however you want to do it, where they're afraid to recognize the importance of competition and allowing companies to compete based on, certainly on price, but also to assure the financial stability of the company. So I mentioned some other factors, but let's just focus here on only 41% of the companies were profitable. Now, auto insurance is a mandatory product. It has to be there. But these are not public companies. Companies make profits. So what did we do? Well, if you only have 41% of the companies that are profitable, you need to rethink whether they wanted to stay in New Jersey. And they left, right? We know they left. State Farm, major one to exit. You don't want that for your consumers. So for us, and keeping in mind balancing, we also have something called an excess profits law in New Jersey, which says, yeah, you can make profit, but not too much, right? Because you need to give back to New Jersey, and the law now requires them to invest in New Jersey by building, hiring new employees. We were also left with drivers who were unable to buy insurance at any price. They could not get agents to even answer the phone, which, if you think about a product that you're required to buy, is really unnerving. So I don't know about your state, but we look back at what we did, and everything was piecemeal. We passed reforms simply were responses to problems created by prior reforms. And so the solution was comprehensive, but it was based on a competitive market working for all. So let me highlight predictability in the rate process. It's not a game. Well, you want 10%, 10% won't play, so we're going to give you 7%, which in no way is rationally related to rate need. And what's rate need related to? Solvency of a company. Yes, and some profit, but you can also, we have an excess profits law. Why should bad drivers be subsidized by good drivers? That's how distorted the system has become. And I will also mention, you have to be creative. In California, we took a page from California. We created a $1 a day policy, a means-tested policy to assure that people who couldn't afford it policy could get one. But again, it was based on a means-tested approach. And finally, how did this all turn out? Well, 75% of the drivers ended up paying less. 75% of our drivers, I repeat that, ended up paying less. And companies were profitable. We had 2 national companies that advertised. They sold in New York, they sold in Pennsylvania, but at the bottom it says, not offered in New Jersey. And they were Progressive and Geico. Very significant companies to bring in, but they wouldn't come until they were satisfied that we created a competitive environment. What did we say? You have rate predictability. We're not going to play that game anymore because we know that consumers lose. And yes, if you want to leave New Jersey, because we made it real hard for you to leave before, you can leave. We tortured State Farm. We said, no, we have enough companies now. We don't have to hold on to people. So how did it end up? Consumers had a choice of product. They had a choice of the company they wanted to go to. And more importantly, they had a choice of price. So thank you for your time. You can tell I'm very passionate about this. But at the end of the day, I'm not all that different than you guys, because you are out there on behalf of your constituents. Those constituents were my consumers. So I appreciate your time. Thank you.
Thank you, Commissioner. We certainly do appreciate your passion, so thank you for your comments. Next up, we do have Sabrina Corlett, again, the founder and co-director of the Center on Health Insurance Reforms at Georgetown University. Sabrina, go right ahead.
Yeah, thank you so much. It's great to be back before you. For those of you who were here this morning, I won't repeat myself and talking about the Center on Health Insurance Reforms, except to say that the topic that I'm going to cover this afternoon is based on a white paper that we published in partnership with the Milbank Memorial Fund. And what I'm going to focus on today is bringing balance to the market, improved affordability through rate review. If the 2024 election was about anything at all, it was about consumers' frustration with the cost of living, including the cost of health care. 44% of U.S. adults report that it is very or somewhat difficult for them to afford their health care costs. Unsustainable increases in healthcare costs are sapping the vitality of our small businesses, increasing medical debt, and straining state budgets. States do have the power and tools to reduce healthcare costs, and many of them are doing so in various ways. What I'm going to talk about today is one option, which is an enhanced rate review program that can both successfully restrain cost growth while also ensuring that savings are passed on to consumers. So just to level set for a moment, the notion that we have like a real market in healthcare where payers and providers are sitting on opposite sides of a table and actually engaging in a real negotiation over prices is no longer true in this country. 97% of U.S. metropolitan areas are now considered highly consolidated. In the words of the famous health economist Uwe Reinhardt, it's the price is stupid. The primary driver of healthcare cost growth in the United States has been and remains the prices that we pay for healthcare goods and services. Consolidated health systems are using their market power in state after state, market after market, to demand and get inflated commercial market reimbursement rates far above their actual costs. Insurers are just over a barrel. These are must-have health systems, and they're basically price takers. And they are passing on these high rates to consumers and employers in the form of higher premiums and cost sharing. So what can states do about this? An enhanced rate review is really only one of several state options to improve healthcare affordability. There's really a continuum from very robust government approach like all-payer rate setting in Maryland, more robust antitrust enforcement with respect to pending market consolidations or acquisitions, maybe even looking at existing consolidated systems. Several states have set up cost growth targets for industry. And then sort of at the other end of the continuum, there's these transparency initiatives, lot less government intervention, but really trying to get inside that black box to better understand what's driving price changes. The challenges with many of these policies are industry adherence. So, for example, in states that have cost growth targets, we've seen year after year industry just busting through those cost growth targets with really no accountability. The other issue is how do we ensure that the savings from any cost savings initiative actually get passed on to the ratepayer? Enhanced rate review can solve for both problems. So what is enhanced rate review? So you all know very well what traditional rate review is, right? It's your insurance department every year is asking the carriers to submit their health insurance rates for the next year and looking to see whether those rates are adequate, excessive, or discriminatory. What they are not considering is whether those rates are affordable and whether the carrier has negotiated the best possible price from their participating providers. What enhanced rate review does is look under the hood at the underlying drivers of those premium increases, particularly the changes in the unit costs. It's assessing contracted provider rates, and also in states that have implemented this, looking at carriers' investments in high-value, low-cost services like primary care. So The states that have been at the vanguard of this are Rhode Island, Colorado, and Delaware. And I'll just cite two studies, independent third-party studies that have looked at the programs in Rhode Island and Colorado. So Rhode Island really was sort of the first to go down this path. They started their enhanced rate review program in 2012. And the key findings in a study that was just published in Health Affairs, I think it was in May, found a 9% reduction in hospital prices relative to comparison states. And the program was able to reduce premiums for ratepayers by $1,000 per member per year by 2022, after the program had been in effect for 10 years. It also reduced hospital revenue by $160 million annually. So there was a clear transfer between hospitals and the consumers with respect to this program. Another independent study looked at the impact of Colorado's program, the Colorado Option Program, and found that premiums for their silver plans in Colorado were over $100 lower per month than in comparison states. So in our paper, we looked at some key considerations for states that might want to implement their own enhanced rate review program. And there are a number of questions that lawmakers will want to work through, including how much decision-making to delegate to the Department of Insurance, what markets should this apply to? Certainly we know, in particular, our small employers are really struggling with affordability, but there are other markets as well that this could be extended to. What authority should be granted over providers? What authority should DOIs have to demand the necessary data? We also provide a step-by-step roadmap of how to get to an enhanced rate review program and how to sustain it over time. And this includes obvious things like deciding on the program's goal and approach, socializing the program with stakeholders, engaging in post-launch communications, building and maintaining DOI capacity, and monitoring and evaluation. So with that, I will stop and welcome any questions that you have.
Thank you very much. Okay, now we can open up this conversation to any legislators if anyone has any questions. Okay, seeing none, thank you both very much for your presentation. We hope to see you back again, and we will now move on to our last agenda item, which is a presentation on trends and developments in combating insurance fraud. I jumped the gun on this earlier, but now because we were just so excited, we have Louisiana Insurance Commissioner Tim Temple here with us today to speak about new initiatives to combat insurance fraud that have been implemented in Louisiana. He will be followed by Craig Sepich from the National Insurance Crime Bureau and Brent Walker of the Coalition Against Insurance Fraud. I also note that two Louisiana laws that Commissioner Temple will be referencing are in your binders on page 37 and also available on the website and in the app as well. And again, we will hold all questions until the speakers are finished. So Commissioner Temple, you could please take us away here.
Yeah, thank you, members. I was so excited to talk about anti-fraud, I had to jump up on the previous panel there. So, and again, I can also tell that I must not be in the good graces with the Treasurer, Representative Edmund Jordan, to put me on the panel between you and happy hour. So, and Representative, I'll try to make that up to you. But no, again, thank you for the opportunity. I know today's been a long day, and thank you, members, for being here and sticking through it. Insurance fraud is a issue that impacts millions and costs billions throughout the country. And it is one that in Louisiana we are dealing with on a frequent basis. It's not a victimless crime. It drives up insurance costs, and it damages trust in a system that is designed to protect people during their time of need. Insurance fraud takes many forms, and best estimates on any given year, it's a $300+ billion a year issue. In Louisiana, because our state's proximity to the Gulf Coast, we are highly susceptible to hurricanes, floods, and other natural disasters. And while these events, post-event, bring out a lot of good in people when they come together, it also brings out a lot of bad actors. Roofers, contractors, out of state, they show up with a hammer, a nail, and a pickup truck, and they're really happy to take your money to help rebuild. But then when you have a problem later and you need to turn to somebody, they're not there. And so in Louisiana last year, for example, Hurricane Francine, we were out after the event, and in the various parking lots of big box stores, there's truck after truck out of state with just handwritten signs and phone number, need a contractor. And again, they're not bonded, they're not insured, they're there just to make a quick buck. That's a form of insurance fraud. Many of you may be familiar with the Texas law firm MMA. Came into Louisiana in 2020 after Hurricane Laura. The then Department of Insurance issued a cease and desist order on this law firm. They were out harvesting claims, spending millions of dollars to marketers, and they were fraudulently representing claimants. And that litigation is ongoing, but they've already admitted in federal court that they had over 800 cases where they fraudulently represented claimants. That's an example of insurance fraud. There's a cultural issue as well, not just in Louisiana, but across the country. But one report says that over 53 million Americans do not view insurance fraud as a crime. 53 million Americans, and the demographics of those under 45 are more likely to hold this view than those over 45. So it's a cultural issue as well. And in Louisiana specifically, with regards to, and I'll focus a little bit on auto insurance. 4.4 million people, that's about the population of our state. Over a 10-year period, and this is from the NAIC database, from 2012 to 2021, they reviewed the number of bodily injury claims filed and the number of bodily injury claim payouts for that 10-year period. And I just want to read some numbers to you. I don't have a slide to show you, but Arkansas, over this 10-year cumulative period, $2.2 billion paid out in bodily injury claims. That was 198,000 bodily injury claims filed, 10-year period. Mississippi, $2.8 billion paid, 176,000 bodily injury claims filed. Alabama, $5 billion paid, 348,000 claims. Tennessee, $5.8 billion paid, 322,000 claims, bodily injury claims filed. Great state of Louisiana, same 10-year period, $10.2 billion paid out in bodily injury claims, 666,000 bodily injury claims filed. That shows that there's a problem in our state. And to that effect, Louisiana, when I became Commissioner of Insurance, I took office in January of 2024, one of the first things that I did was sit down with our fraud unit and ask, what do you need? And like any good agency, they said more people and more money. And so internally, we allocated more people, and we allocated some more funds. But beyond that, I worked with the legislature, and last year, and I know I've got my House, my chairman of House Insurance and chair of Senate Insurance and other members from House Insurance Committees, we expanded the definition of insurance fraud in our state. And to that effect, that division also said we need additional software. We need things to go out and look for fraud. And fraud just isn't on claimants. It's also on insurance companies. And since I've been commissioner, we have fined insurance companies for post-claim underwriting and other bad activities. But one of the major cost drivers is on the claimant side. And so we have used some some software. We're kind of, I think, unique in some areas. And if I can find my page that has all the really good stuff on it. Some new initiatives that we've done at the Department of Insurance. We have partnered with Forewarn. And as far as I know, we're the only state in the nation that's partnered with Forewarn. And through that partnership, last year, in September of last year, when Francine came ashore in Louisiana, they identified bad actors that were using the internet to ghost like they were an insurance claims company. So if you typed in your insurance company name and claim, just the word claim, this website would pull up. And it would give you a phone number, and you were led to believe that you were dealing with your insurance company claim department, when in fact you weren't. But through this partnership, we were able to identify that, notify Google and other search engines, and then they were able to flag that so that it didn't happen on a go-forward basis. But as far as I know, Louisiana is the only state to partner with Forewarn. We've got an anti-fraud one for government through Verisk. I think we're the third state in the nation to deploy this. There's a company called Wooster, which is a data intelligence procurement platform. Valid 8, which is a forensic accounting software. But collectively, and I've authorized additional funding to utilize the data from those groups that I've mentioned to aggregate in a way that has not been done before, to look for relationships and connections between claimants and other service providers out there. And look for that, again, that collusion where people are gaming the system, where they are committing insurance fraud. And so I think Louisiana, I think you're going to see good things from the state of Louisiana going forward, identifying fraudulent activity out there. And like I said, this is not just claimant only. There are things, like I said, the Department of Insurance, we have tools that we can hold insurance companies accountable. We can do market conduct examinations, financial audits. There are things that we can do to help hold insurance companies accountable as well. But from the claimant side, these are all tools that we're deploying in the state of Louisiana to combat fraud. And I appreciate the opportunity to be here today and answer questions at the appropriate time. Thank you.
Thank you, Commissioner. Craig, you're up next, so the floor is yours.
Is it on? Thank you. Craig Suppich, Director of Strategy, Policy, and Government Affairs at the National Insurance Crime Bureau. And before I get into my presentation, I'd like to recognize Simon Blank with Florida DIPS, who's to my left here to speak.
If I may.
Okay. Colonel Blank, you may go right ahead and speak first.
Thank you, and I appreciate it, and I'll keep it brief. I am Simon Blank. I'm the colonel in charge of the division of the Department of Financial Services Criminal Investigations Division. We are the ones that oversee the investigations into insurance fraud in the state of Florida. And as Representative Cassell can attest, we seem to have quite a bit of a challenge in our state, but we're doing our best at it. We are the third largest state in the country and probably the second largest behind California as far as an enforcement agency when it comes to insurance fraud. And so just to give you a little perspective of the scope of the problem and to support what Commissioner Temple has been talking about, over the last 5 years, we have received over 90,000 complaints dealing with insurance fraud in our state. We have about 150 sworn officers that investigate insurance fraud, and we were able to open about 8,000 cases out of everything that we got. So we're dealing with about 7% of what we get, we're able to actually investigate. We're lucky enough, we do a good enough job. We were able to arrest about 8,000 people, and we were, to put it into perspective, we were able to charge over $371 million worth of fraud. And that is based on just 7% of the cases we were able to investigate in our state in the last 5 years. Through the courts, we were able to recover over $417 million worth coming back. We're talking about $74 million a year worth of fraud that we were able to identify and charge. That doesn't include the cases that we weren't able to look at. That doesn't include the cases we weren't able to prosecute for challenges within the cases. For us in Florida, the biggest trends continue to be auto and PIP. That's about 55 to 60% of what we look at. with homeowners coming in and growing as of late. And obviously, everybody's quite aware of all the different trends. Homeowners, we got the roofers, we got the tree removal companies, we have solicitation, we have assignment of benefits, abuses, and litigation. It is quite staggering. Our state has been able to implement quite a few changes as of late with legislature, involving the removal of AOB use in commercial and residential properties, the one-way fees that was being used within the litigation aspect of it. But they've also implemented legislative changes holding the insurance companies accountable, dealing with communication, forcing them to reply within 7 days of receiving a claim, and making sure that they do their inspections within 30 days. But once again, and I know time is running short, so I'll stop here. It is a huge problem, and so I can't stress enough how critical it is that your committee, Mr. Chairman, and all your committee members, and the whole group of legislators and regulators keep this problem in mind and be aware of how much it is truly impacting not only the industry but the constituents that you represent, because ultimately they're the ones being targeted, and at the end they're also the ones having to pay the cost of this problem. So with that, I'll stop. Thank you.
Thank you, Colonel. Really appreciate your comments there. And now, Craig, back over to you.
Thank you. Craig here with NICB. And so those who may not be aware of our organization, we have a 110-year history, headquartered here in Illinois and in Oak Brook, just down the road outside Chicago. We're the nation's premier nonprofit organization dedicated to fighting insurance fraud. And our just over 1,200 members include, the property and casualty insurance companies, vehicle rental companies, auto auctions, the vehicle financiers, and your self-insured companies. And so as we're looking at insurance fraud and what are some of these growing trends that we're seeing? It's the increased billing fraud. These are the unscrupulous actors that are inflating the cost of claims, repairs, or submitting fictitious claims for events that may not have occurred or treatment that did not exist. So it's very common with contractor fraud schemes, bodily injury and PIP claims, and predatory towing. So looking at some of our recent data trends on these, you can see 15% increase in roofing inflated damages, 46% in fictitious losses, similar numbers in predatory towing or auto questionable claim. And so as we're all concerned about the cost of insurance, these are factors that are pushing up those rates and impacting our consumers. These are just bad actors. They're exploiting people oftentimes after a loss has already occurred, and they're preying on that behavior. And so there's been a number of legislative efforts in recent years to combat some of this inflated billing fraud. The Louisiana bill passed just last year, which the commissioner touched on. Kentucky this year also expanding their definition of insurance fraud to exclude misrepresentation, scope of damages. And then, Minnesota last year, as part of one of their omnibus bills, addressing the growing problem of tree trimming fraud. And so to highlight this example, which was just incredibly egregious, one of these fraud referrals that we received and helped investigate, there was an elderly woman, lived alone, following a storm event, and she had a number of trees fall on her property and cause some damage. The tree removal service that came to her door and, solicited her offer to take care of the damages, said they would bill the insurance company for everything. The bill they submitted to the insurance company was for $84,000, which immediately, raised the eyebrows of the insurance carrier to look into that more closely. Fortunately, this woman and one of her relatives took photos of the damage so that they were able to submit with the claim. The insurance carrier, as part of the investigation, then reached out to several reputable companies in the area to get an estimate to kind of gauge what a non-inflated bill would be. Those numbers came in at about $10,000. So just substantial insurance fraud, and that is just one of the many examples we have seen. And so another component is, well, what do we do after the investigation? And we've identified these. Most states have very robust insurance fraud units with very experienced investigators, but at times there's a lag getting these cases to prosecution. Not all states have dedicated insurance fraud prosecutors or statewide jurisdictional authority. So when you're in some of your other counties, those county prosecutors, they have a very heavy workload. They're dealing with, more violent criminal activities, your homicides, carjackings, domestic violence cases, and that's where their priority lies, is is understandably so, taking care of those violent offenders. But it means white-collar crime, such as insurance fraud, is deprioritized. So ensuring that you have the statewide insurance fraud prosecutors, you have that expertise and assurance that you have a very knowledgeable prosecutor to handle those sophisticated, complex crimes. And so just various policy recommendations there. It's just addressing venue of jurisdictional issues. Sometimes in some of your more rural counties, it's difficult to get, time on the docket to prosecute these cases. Or you have other instances where it's, in the evolving stage, such as what North Dakota did. It's where is the claim, where's the fraudulent claim submitted and committed? And so it's addressing those kind of evolving differences as our technology continues to ever improve. There's also, of course, the increased funding for your attorney general offices, your departments of insurance to establish your insurance fraud units. As we continue touch on other efforts, it's, continual focus on legal system abuse, your third-party litigation financiers, your assignment of benefit abuse. We're continuing to see more involvement from these litigation financiers that are investing in these firms that are filing these fraudulent activities. And just one, I think, heinous example in the litigation financing is the slip and fall case out of New York. It was orchestrated by an orthopedic surgeon and an attorney, and they were soliciting patients to either fake injuries or cause other crimes, and these individuals were often immigrants, so exploiting language barriers. They were going to homeless shelters, addiction rehab centers, and just absolutely preying on the most vulnerable people in our populations. These individuals were intentionally harming themselves. They were undergoing unnecessary surgical procedures, all with the guise to inflate the claims. So then the attorney could come in, file the lawsuit, and then the litigation financer, who is upfronting the cost of the legal fees, the medical procedures, is then taking their percentage cut on the back end of it. So it's just absolute greed and exploitation. And then you have the perpetrators of the offense being both, the perpetrator and the victim in this instance. And happy to answer any questions. I know we're kind of short on time, and really just also would like to applaud a lot of the efforts of many in this room to address insurance fraud with some of the bills that you've filed and helped get enacted in recent years. It's truly been, encouraging to see that effort take place.
Thank you very much, Craig. And last but not least, Brent, the floor is yours.
Thank you, Chair. I think the Commissioner made a comment earlier about being in between happy hour and you guys, so I feel that pressure. My name is Brent Walker. I'm with the Coalition Against Insurance Fraud, and I just want to thank the committee for hearing this important topic. And Commissioner, thank you for everything you're doing in the state, and I know Colonel Blank is a hard worker.
Can I pause you for one? Can you just bring the microphone a touch closer?
Yes,
Perfect.
how's that?
Thank you. Good.
Thank
Good.
you. Sorry about that. I also want to thank the Commissioner for sharing some of the results of our research studies the Coalition has published. And if anyone is interested, I'm happy to share the cost of insurance fraud study or the psychological study. I think you would find that interesting. I wanted to mention that we're talking about a lot of predatory practices here. Predatory towing, predatory contractor activity, predatory litigation harvesting. But without a prey, there is no predator. And that prey are your constituents, the consumers, who we've heard from NICB often even submit themselves to unnecessary medical treatments. They can have liens filed on their homes due to the bad activities of these contractors. And you really need that buffer between the consumer and these bad actors. And I think you've heard some great examples of not only what states are doing, ideas on how to fight fraud, and even some ways to quantify it. The way that Colonel Blank and Commissioner Temple talked about some of the statistics really gives other states ideas on how you could compare those same fraud fighting measures or that environmental risk assessment for yourselves. Even this morning, Director Gillespie talked about that fine balance between consumer protection and a thriving market. Reducing or removing insurance fraud, speaking to the choir, certainly one of the main ways to do that. I'll end, and I know that we're ready to go today, and this has been an amazing event, but I just wanted to remind you, your constituents can go from consumer to being coached by the fraudsters or to even be connected to a questionable claim, and worse, complicit in the scheme in the blink of an eye. They just need help. Sometimes they're vulnerable. They're standing in their front yard after a disaster has wiped through. Predatory contractors come. They can become complicit just very, very quickly, and they don't deserve that. They just need help. And so I would ask us, whatever the remedies are in your states, I'm standing by to assist, and I feel great that I have stakeholders like my fellow panelists, happy to answer any questions. And again, thank you for this attention to this important topic.
Thank you very much. Now, with that, I will open it up to the floor. Do any legislators have questions for the panel? All right, you weren't kidding about happy hour there. But thank you again, everyone. Commissioner Temple, we really appreciate you being here and sharing Louisiana's experience. So we thank you for all the work that you guys are doing there. And thanks to Craig, Brent, and Colonel Simon, Colonel Blank. Thank you for being here as well. We appreciate your comments on the topic, and hopefully it's something we can keep working at and save our consumers some money here. So thank you all.
Thank you.
Moving on, we have any other business? Yes, we have one more item of business, one quick item of business, and that relates to a topic that was on this committee's agenda at our last meeting in April relating to charitable bail organizations. I'd like to recognize Indiana Representative Peggy Mayfield for some brief remarks.
Yeah, you think you guys have it tough. I'm under the category of any other business. So thank you, Mr. Chairman. I appreciate the opportunity to revisit this topic as a follow-up to our initial discussion in April in Charleston. The bill itself is in the Charleston NCOIL packet from the spring. I know when you hear the term bail, you might think to yourself, what does that have to do with insurance? But in many states, bail is actually an insurance product and is regulated under the insurance department. First, I want to stress that this legislation is not about whether bail is an appropriate policy in the judicial system. That is to be determined by the legislative and judicial branches of each individual state. This discussion is about the regulation of bail as an insurance product, what parameters could be used to protect the public, the alleged offender, and the integrity of the criminal justice system. I sponsored a law in Indiana that regulates so-called charitable bail organizations within the Indiana Insurance Department. These organizations are basically a GoFundMe, crowdfunding type of organization that pool money to be used to post cash bail. The biggest one and most well-known one being the Bail Project, but they are far from the only one. We used New York's bail law as a template because it had existed already for a decade. And Indiana, like some other states, has a few foibles. One of them is it has a friends and family clause limiting the posting of cash bail to a relative of the offender of the third degree. A couple of other parameters are it has to be a legitimate organization doing business in the state. The defendant must be indigent, which requires a court hearing to determine that. You cannot be charged with a crime of violence or a felony charge if you have a previous conviction of a crime of violence. This is one of the other foibles that we found in Indiana. We were throwing around the terms crime of violence and violent crime as if they meant the same thing. In Indiana, they do not. Strangulation is a violent crime. Never seen one that wasn't violent. But it's not a crime of violence unless you're pregnant. So we had to work through some of these little oddities. It does not apply to surety bonds. Yeah. In order to make the courts whole, the court could order the forfeiture of the bond if there was a conviction, or they shall order the forfeiture of the bond if there was a failure to appear. That means the taxpayers weren't on the hook for all of these. We made modifications to address constitutional issues expressed by other legislators. And the utilization of crowd-funded charitable bail fluctuates with current events. States might want to have something in the can ready in the event that there's a sudden escalation in your state. So the law was actually challenged in court by the ACLU, and we ultimately prevailed. I just wanted to offer myself as a resource to any state who is interested in this issue. I think it's an important issue, given that our law in Indiana has withstood court challenges, and I think that provides a good starting point for other states to look into. Thank you, Mr. Chairman.
Thank you very much, Representative Mayfield, especially for keeping those remarks brief but informative. So with that, that concludes our business here. May I have a motion to adjourn this committee? You got a second? All right, we are adjourned.